investing is the last liberal art. I mean, you really, if done right, you're bringing in all of these different mental models, these different areas of the world, and how fun is it to be able to say, okay, today I'm going to look at the banking industry, and then I'm going to look at the insurance industry, the home improvement industry, whatever it might be. It just business is all around us, like it or not, and so just how interesting is it that you can just kind of pick and choose which direction you go in, and be able to integrate all of this worldly wisdom into one place. I mean, I think it's just fantastic. To take it and actually turn it into an advantage is, I think, why people continue to just love Charlie Munger, because he just proved it. Bringing in all these different things into the picture, human psychology and physics, just everything. I mean, it's just so fascinating to see how the world works, and investing. You get to see it all.
It's not a typical 9 to 5, is it? Welcome to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest topic of all, money. How to make it, save it, keep it. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. My guests share their practices, principles, and evergreen wisdom. I'm your host, Bogumil Baranowski, author, TEDx speaker, and investment advisor to wealth creators with patient capital and an infinite investment horizon. I work with families and individuals who aspire to grow wealth over a lifetime and generations through disciplined, thoughtful investments in durable quality businesses, while giving money meaning. Join me on this quest to unearth and share the wisdom of the ages. Let me share with you the podcast program disclosure statement. Blue Infinitas Capital LLC is a registered investment advisor, and the opinions expressed by the firm's employees and podcast guests on this show are their own and do not reflect the opinions of Blue Infinitas Capital. All the statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. The information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. The information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. None of what you're about to hear is investment advice. My guest today is Adam Mead. He's a professional investor, founder of Mead Capital Management, and the author of a wonderful book, The Complete Financial History of Berkshire Hathaway. He was on Talking Billions over a year ago, and he returns to talk about Berkshire, Buffett, Munger, investing, running an investment firm, and so much more. Please help me welcome one and only Adam Mead. Hi, Adam. How are you? So nice to see you again.
You too. I'm well.
Well, I got to see you in person in Omaha again. You were speaking about Berkshire, being the expert on the topic, and we chatted in between a few weeks ago, maybe longer now. We were just talking how time flies. When we scheduled this recording, it felt like it's a long way away, and here we are. But this time around, since you've been on the show, I wanted to dive into some very specific topics. I highly recommend everybody goes back and listens to your first episode on the show where we talked about Berkshire and your book, which is a wonderful read and an incredible introduction to Berkshire, and we'll talk more about it today too. But I also want to talk about running an investment practice, which is something you and I talked about off the record, but I feel like there are some topics that are relevant for the audience as well. But I want to ask you, first of all, about this year's annual meeting, and we talked about it, the two of us, before. This was the first time that Munger wasn't around, and I'm very curious how you think about the future of those meetings. Will you be going back, what they will look like? And since you've been to quite a few and you've dedicated so much time to researching the Berkshire and learning more about it. How do you see the experience going forward for all of us that have been going to Omaha for a while?
Yeah, this year was different for sure. I've been going since 2012. Every year, even the pandemic years, I was at my computer with my, Berkshire garb on and my See's candy that I ordered ahead of time. So I was as close as I possibly could there. But every year since 2012, and I don't anticipate really ever stopping. I eventually would like to get, my two daughters, almost 8 and almost 10, eventually get them out there, but I have no plans to stop. And I think, as you well know, anybody who's even been out there, 1 year, it's the Berkshire culture, and you and I are part of it. Just you meet new friends, you see old friends, from all around the country, all around the world. And why would you ever want to give that up? So I don't think that will ever stop. I've thought about this more over the last year, but in the context of your question, I think everyone, or a lot of people, I should say, have this sort of feeling of, okay, after Buffett, and it's this demarcation point, right? I'm of the opinion that we're, especially this year, with Munger gone, we're witnessing the transition. This is a living transition, if you will, because it's not going to be the day after Buffett dies, the day after he decides to step down. This was all part of the plan, a overlapping, sort of seamless transition. And so that's what I really saw this year, was a lot more, whether it's actual or just, more explicit to the shareholder, more of a deference to Greg. Greg will handle that. Buffett was, in charge of BNSF until Greg took it over. Greg will answer the questions. Buffett wants to have Greg be in charge of all of the investments, at least from,
right,
the buck stops with him. So I think what we're witnessing is the transition plan in action. Greg, and certainly this year was poignant. I will absolutely shed a tear, more than a tear, when Buffett is no longer there. But I think it will be, and I don't know what the right word is. I've talked to some people about this over the last year. I don't want to say it will be better, but it will be, the word I'm looking for is, it'll be more concentrated. What I mean by that is, you've been out there. There's 40,000 people, at least a quarter, if not more, of the people that you meet every year. They're out there. It's their first time. I have to be out here because Buffett's going to die and I'll never get the chance. Those people more than likely are not coming back.
Right.
The people, I'm going to come back to see you, Bobby Mill. All of my friends, that culture, that momentum that has now been in place for almost 60 years, there's no stopping us. Will it change? Yes. I think it will become, like I said, more concentrated. I think that 40,000 will eventually shrink to, I'm hoping, no less than 10,000. But those 10,000 are going to be, the diehards. They know the history. Maybe some new students that really got the bug, and we can kind of take them under our wing, and just celebrating the past, but really looking out for the future. And I think Greg and the others, Ajit, they'll continue it, and so will the manager. So I'm not that I want to see that day come, but it is coming, and we will thrive at Berkshire no matter what happens. But it will be poignant.
I think the word I'm hearing is community, that the event created this large community. That what's remarkable to me is that people come from all over. It's unbelievable, from all over the place. And I remember going to those Berkshire meetings a while ago, and I missed some. And Buffett would have a meeting with international shareholders, right? Now it feels like, I don't know if half or 2/3 are from outside of the US. People fly in, they bring families, and they want to spend that time and experience it. And I want to highlight for people that haven't been, and at least my perception is that, yes, there's the annual meeting on Saturday, but there are so many other events and so much mingling and exchange happening around and before and after that's outside of the meeting. So, of course, we go to hear both of them, and this year just Warren, but it's also for all the people that come. And some of the people I get to see, I don't see them until Omaha.
Mm-hmm.
For various reasons. And so it's an opportunity to see people that follow the same ideas, same principles. And I think you can relate it to that too. The reason why I keep going back is that it's a wonderful reminder of the principles that we follow. But the fact that we go there, it's kind of yet again, we are told that this is true. No matter how silly the world can get in a particular year for whatever reason, we are reminded that these things still make sense. This still works. This still makes sense. And I think that's something that we will need. I do need it. And it's fun to experience it with people that we know and we like. And I wrote an article after one of the meetings. I called it Return on Kindness, inspired by Chobani's CEO idea of return on kindness. What I experience over there, it's a lot of kindness from all directions. Even people holding a spot for you, or people, I don't know, there's just a lot of kindness. It's very different. I've been to some annual meetings before that are very formal, very structured, and we have some fun too, and you get to shake hands with the founders and so on. But this meeting is very different than any other annual meeting that I can think of, and Markel is up there too. I think they're aspiring to be, a similar experience. I went this year. I know you've been too. But there's a handful of places like that.
Yeah, what one sort of thing just strikes me. How many other places would you go with that many people that you would feel comfortable leaving your backpack, your laptop, your phone on your chair? I've seen this in the arena. You could. I think you could leave your wallet and it would not be touched. That might be, just me kind of drinking the Kool-Aid here, but I've looked around. It's like people you trust the people. There's not, the people look different every year. There's some new crowds, but we're all in the Berkshire boat. We're all part of this partnership, and people who don't go, I don't think quite can grasp or believe that nearly $1 trillion company, with 500,000 employees and all these shareholders can feel like a partnership, but it really does. It really does.
They accomplish something special. Walking away from one of those meetings, I wrote down how I feel like it's not the business that's on the pedestal. It's not the CEO that's on the pedestal. It's the shareholder that's on the pedestal. And it's a great reminder of the fact, and Buffett talks about it a lot, and I would love more companies to embrace it in bigger way, that who are you running the business for? Obviously, you're running it for the customers and suppliers and your employees. But at the end of the day, there's a shareholder that owns the business. And no matter if they own a single share or if they own half of the company, you treat them in a certain way. And it's part of the DNA, the culture that Buffett promotes. And I think more and more companies embraced it over the decades, where you start to pay attention, who is your shareholder? And I think it's not a rule around the world. I think that's how I would put it. And I had some guests on the show, and we talked about international investing, how you go to some markets that are, exotic and less familiar. And the shareholder culture doesn't rhyme with what we got used to. And there's even a term that somebody shared with me, that there's a working shareholder and a non-working shareholder, if I'm remembering right. But basically somebody that's not part of the company, actually working for the company, and the other people that are also shareholders. We don't always treat them the same way. And once you start to hear those terms, you realize, oh, so we're not equal partners in this. And when you pick up any filing, which I highly recommend, I was going through some proxies the other day, and I saw this one sentence, how, we all have the same economic rights. And it's a very powerful statement. And it's like the foundation of the system of ownership of businesses and the stock market as such, right? It says in there, like in the Bible, then we have the same economic right. If this company decides to pay a dividend of 10 cents per share, it doesn't matter that I have a single share. I'm getting the 10 cents. I know the founder, I don't know the founder, I have the same last name as the founder or not, it doesn't matter. I get the 10 cents. It's a very powerful thing that's not a given everywhere in the world. We kind of earned it, and maybe we forgot it. And Buffett reminds us how I'm treating you all the same way I'm treating my sister. I think it's phenomenal.
I do too. Yeah, and it needs to be celebrated and reiterated every year. And that's that sort of annual realignment that we all experience. Going out there, hearing a lot of, the old and the timeless principles, but, with that new, what's new in the world, what's new in investing. And, there's a little bit of both, and, it's what makes it so fun.
Well, I think the beauty of investing is that it will continue to change, right? So the businesses we have today, we have to accept that many of them will not be around when you and I, are Buffett's age. I think that's something that we have to accept, and we will have to navigate that. And, I talk about infinite investing in finite assets. When you really think about it, the businesses we own, they have a finite life, even if they're still around. I read this study that the glory years, the best years for a lot of businesses, it's about 2 decades. And obviously some companies, averages don't tell the whole story, but just for the sake of the argument, I feel like a lot of companies have 2 decades of really great runway. And then they're still around, but they're not as great. And then the returns start to drop. They have to go after opportunities that are not as attractive and so on. It's a cycle. It's a life cycle, like anything in nature. But when you think about it, so if you have a 100-year horizon or an 80-year horizon, I'm thinking of Buffett and Munger, you will be owning all kinds of businesses. And you pointed out in your book that Berkshire owned such a wide range of businesses. And you also point out in your book how the original capital for the textile businesses came from the whaling fortunes of the Northeast, right? So you see this continuous flow of capital to the next opportunity and next opportunity. The trick is not to overstay your welcome, don't you think?
Right.
If you overstay your welcome, you might be stuck in a business that eventually will go away. Adam, I want to ask you a big picture question about why investing. That's something that we touched on last time we spoke, but I'm really curious. You have this genuine curiosity about the world, and I can tell, and the research you've done for the book and the research you're doing, I'm very, very curious. Why do you decided to deploy all of this curiosity into investing and not something else? Or was there something else and investing became it?
Yeah, well, I think I just have that natural curiosity, and that's why someone like Charlie Munger really, really resonated with me, because that's just how my mind works. I'm kind of all over the place. Well, how does this work? How does this fit in with this? And sometimes I'm envious of the people have one chosen path. They say, I'm going to be the best baker, or I'm going to be the best, engineer, or, whatever it might be. I just love it all. And I think, I spent 10 years in commercial banking, commercial credit. That is very much like investing. It's the other side of the coin in terms of, equity investing. But there, I got to see all these different businesses. So it's, I think investing is so appealing because really, I think, was it Michael Mauboussin who wrote the book, The Last Liberal, Investing is the Last Liberal Art. You really, if done right, you're bringing in all of these different mental models, these different areas of the world, and how fun is it to be able to say, okay, today I'm going to look at, the banking industry, then I'm going to look at, the insurance industry, maybe I'll look at trucking, maybe I'll look at, home improvement industry, whatever it might be. Just, businesses all around us, like it or not. And so, just how interesting is it that you can just kind of pick and choose, which direction you go in, and be able to integrate all of all of this worldly wisdom into one place. I mean, I think it's just fantastic. So it's just it's just the way my mind works, which again sometimes feels like it's too spread out, but to take it and actually turn it into an advantage is, I think, why people continue to just love Charlie Munger, because he just proved it. I mean his article, his story about Coke, bringing in all these different things into the picture, human psychology and physics, just everything. I mean, it's just so fascinating to see how the world works, and investing. You get to see it all.
It's not a typical 9 to 5, is it?
No. I mean, I think I'm not as upset, and that's why I say I think I had this conversation with some friends. Like, okay, if you were to get to have lunch with either Buffett or Munger, who would you pick? And I love Warren too, but I mean, I think I would choose Charlie because just to be able to go off on these, and I think Warren is obviously a genius and he knows a lot more than I think he gives on, but Charlie was just so broad that you know it gives you the excuse almost. I think that it may be an excuse, right? Okay, I'm not thinking about investing, but I'm going to go read, whatever it might be, this science book or, this book on philosophy, whatever it might be, whether directly or 5 years from now or 10 years from now, you might think of something that comes into the picture from what you read there. And it's like,
Huh?
oh, that's just awesome when that happens. And so I think it's kind of almost this excuse of like, well, yeah, I'm still working on investing, but I might be reading, I've got, I won't dig it out, but I've got, a couple of Discover magazines on my desk. I'm reading a Richard Dawkins book, The Ancestor's Tale right now, which again, I mean, just think about that. I mean, just Charlie talked about niches in the business world. And, I'm just reading about, I'm about halfway through, but how in Australia, the marsupials fill the same niches that the, carnivores, the other mammals fill in other areas of the world. I mean, it's the same thing. It's the same thing in the business world, right? We have these niches and we have specialties and we have birth and death and, speciation with new businesses splitting off from other ones. I mean, it's just all the damn same thing, like right staring us in the face. And so I love it.
It's fascinating because somehow connecting all this acquisition of knowledge with investing is just natural to us. But when you think about it, you could ignore the investment world for a second, right? And continue to acquire this kind of knowledge. But I don't know why. Maybe it's a tick, or it's something that once you see it, you cannot unsee it. I was reading about robots being used in surgery and all kinds of equipment, and there's a particular company that's a market leader. I was just fascinated with the technology. But then I was thinking, like, who's publicly traded in that space? Who is doing? It's natural for me to ask that question. Like, how could I be a part of it? It's definitely something intriguing. I don't know if the price is right. I don't know enough, but I'm definitely leaning in that direction. That I'd love to be an owner of a business that's doing something in that field in some way at some point in time. Maybe, it's my wish list, and that's how ideas end up on my wish list from all directions. But somehow I always ask that question: is there a way to be a part of it through the public market as an owner? And maybe it's something I can't unsee. It's something that maybe, once you see it, you can't unsee it. And so I'm not pursuing just wisdom. And there's a lot of things that I learned that there's no use for it in a direct way in my work. But then you could argue that somehow it allows me to understand human psychology a bit better, or my client's behavior a bit better. So all of it is somehow helping me in one way or the other, in life or work or in investing. I don't know. And I sometimes wonder, if you took investing out, or if you took money out of the equation, would you still pursue this kind of knowledge? Would you?
I think so. And again, It's just, I just think it's just sort of a byproduct. It's just, it's, we're lucky to be able to have, this skill set, this interest set that allows you to do it for yourself, do it for others, actually make money in the process. But the sort of core of why we do it, what makes us tick, is something deeper than that.
Well, I think it's a permission to learn. It's kind of being a modern day Renaissance person, right? Like, and we hear those stories. That was a time when you could actually have all of the biology, philosophy, and architecture knowledge in one person. I think it's harder and harder to imagine that. I think once you zoom in, there's so much more detail and so many more things to know in all the fields. I don't know if we can accomplish it, but I think we can know enough to have an understanding of different fields. Even if we're not going to be the brain surgeon, we can appreciate what's needed to conduct a proper, there's certain checklists and protocols and so on. It's fascinating, right? I was reading a book. It's called The Book of Charlie, not about Charlie Munger. I don't know if you heard about this book, but it's a true story of a man who lived in Kansas, and he lived to 109 or 110. And this journalist wrote a story about him, and he was a doctor who lived from the beginning of the 1900s until 2014-15, and he saw all the change in medicine, from no penicillin to having penicillin, to not having painkillers, to having more and more painkillers in surgery and so on, and how actually World War II introduced so much more need for all kinds of things, and how he was adapting and learning. And he was learning and going to doctors' meetings even in his retirement. And the other fascinating thing about this character in the book is that he lived in retirement longer than many people work in their careers, right? Which makes you think of, compounding when you think about just not money, but like knowledge, how many years. It's just a fascinating thing to look at the history of the last century or the previous century into this century through the eyes of a human being, and how much change he has experienced. And the author, I'll look up the name and I'll add it in the notes, did a remarkable job in, retelling the story, how much has changed and how much we could have learned. And Munger has lived through a world that has changed so much around him, and he kept up with the change, and all the way to the fact, as you write in your book, they ended up owning Apple, which is a company that's so far away from anything that Buffett owned in the early days, or anything that was available to be owned when the two of them were kids running around and, helping in the old Buffett's store in Omaha and so on. So it's fascinating how much change has happened throughout that time. I want to ask you, Adam, about investing. So people choose to invest their own money, and I think it's a great responsibility. It's a lot of work if you take it seriously. But some of us choose to manage family money, which I think it's an experience in its own. I don't know if it's harder or easier. I think it's different. That's something to acknowledge. But some of us choose to eventually invest other people's money. Can you talk about your journey? You chose to invest other people's money, and your friends' money, and your family money, and your own money. And it rhymes with my story. But I'm wondering about the experience. It's a whole different thing when you start to manage other people's money.
Yeah, it just kind of happened, I guess. It was not, like a lot of things in life, totally intentional. Then it's hard to believe it's been 10 years now since, I was officially registered as an investment advisor and, could actually take other people's money for a fee. But, it just kind of happened organically. Discovered investing. I'm working for a bank. Love learning about investing, just on the side. I'm doing my own thing. And, I have some people say, hey, can you manage my money? Okay. Think about that. You do some research, and okay, well, if I'm going to do this, I want to do it above board. And, the bank knew about it because I was working at the bank at the time. And I said, well, I'm going to go out, I'm going to get registered, I'm going to do it, the right way. So that's kind of how it started. That was the germ of investment firm. And so that was kind of just in the background, kind of percolating, my own money, a couple of, one or two clients, while I was working full time, at the bank, and obviously quite a bit of overlap. I've used the example of lending and equity investing are two sides of the same coin, because you're looking at the same cash flows. You're just determining whether those cash flows can repay a loan, or, valuing those cash flows, putting a discount rate on them and saying how much are they worth. So very much the same mindset. And even I think there's a benefit to coming from the credit world, because you have this risk first mentality. So, I was kind of already primed for being an investor. And then decided at the end of 2019, 2020, right before the pandemic struck, is when I went out full time on my own. So, decided that, hey, I'm actually pretty good at this. I like it. And why shouldn't I try to make this, my livelihood as well?
Right.
I pining, as I think a lot of people are, for that true independence, like Charlie Munger. I'm kind of halfway there, where I've got my own shop and hang out a shingle, and I can do my own thing. But it's I can't fire my clients yet. Let's just say that. But I think I would still do it even if I were independently wealthy. I mean, I think there's just something sharpening about doing it for other people. You can get lazy when it's your own money, and you own the consequences. But there's that Rubicon that you cross, when you're managing someone else's money. And I cannot even imagine how Buffett feels. He says, running Berkshire, I'm investing your money, your savings, and that's how I feel. I mean, I just have that feeling of, you don't want to let people down, and you want to do the best you can for them. But I think that also sharpens me, and so I would never want to give that up. And I enjoy. I mean, I think just aside from the pure philosophical exercise that is investing, I mean, you can change people's lives. I have a focused strategy where I pick individual stocks, and I also have a financial advising, sort of more traditional financial planning, financial advising arm of what I do. And, the impact there, I think, is even more satisfying, because you're saving people money, you're helping them retire, you're helping them, kind of weave together the threads of their financial life into one cohesive picture, and giving them the confidence to live their best lives. And I just think there's something just intrinsically so rewarding about that again, it all fits for me, and it works, and I love it.
No, I love the sound of it. I wrote down a couple of things. One, it made me think of a quote from F. Scott Fitzgerald, that writing was something he had to do. And when I saw that quote, I thought, investing in something I had to do. It wasn't a choice, and I didn't know shape and form and expression of it, but I had to do it. And it's such a big part of my life that I go about my day in some way, something. It's a collection of, I'm collecting information or something, stories. I even talk to people, and it's very naive and childlike. I'm just curious, and I ask them about something that I can tell in a second. It's not my intention. I'm just curious that, this is something that will help me with this decision or this choice. Or it's such a big part of my life that it's like breathing, like it doesn't end at 5 o'clock. It doesn't start at 9 o'clock. It starts with the conversation with a taxi driver that reminds me of something. And I feel like, I should look at that stock again because of something he mentioned that he didn't even think he mentioned. He's a messenger in some way that I should be looking at something. I can't take it out of my life. I feel like it is my life. I think it's like asking Fitzgerald, stop writing. It's like, writing is his life. And I'm sure he was walking around collecting stories, hearing people share their life and thinking, that's a character from my book. And I think it's just it was him. It was his life. And you mentioned something that made me think of a book, and writing that I got introduced to not long ago. I don't know if you know Nick Murray, but Nick Murray wrote books that promote investing in stocks and acknowledge the fact that investing in stocks emotionally on a behavioral level is difficult. So you might need an advisor to help you get through hard times. Basically, that's what he teaches. And he wrote a book, Simple Wealth, Inevitable Wealth. And he says that through ownership of businesses, whether it's, a diversified portfolio, index fund, that's secondary, active or passive, just the ownership of businesses through the stock market, you will build wealth. And he makes this argument that, over this person's lifetime, the S&P is up 6 times or 10 times or 12 times. You will make money over a long period of time with volatility, with sell-offs and so on. But you might not be able to do it on your own. And I think that's something that I'm realizing, tying back to the earlier point about managing other people's money. As much as I'm a competent stock picker, I believe, at least in the way I would define it, I play an emotional role. I address the behavioral challenges of investing. And how many times, even a few weeks ago, when we had some market jitters, I spoke with clients who I've known for a long time, and they appreciated that I reach out on days like that. And they know that it's fine. They know that we're holding on to things. They know that I might be buying things, but they appreciate that I'm there. It's like that doctor that holds your hand and says, Adam, it will be fine. That's a competent doctor, but you still need their hand. Say, it will be fine, right? And that's in that intangible, invisible role that I think you and I play in people's lives. And as you said, it can have a huge impact.
Yeah, it's almost it's your financial bedside manner, right? I mean, that's so important.
I think, when I was learning business and finance at school, I remember that we spent very little time, if any, on the people behind the capital. And I feel like that's something that I grew to appreciate in a huge, huge way very early on in my career. And I think that's what you pointed out earlier, how whose money are you managing? And what is their situation? And what is their perception of the wealth that they have? What does this money mean to them? Could they lose this money? If they can't afford to lose it, how do you address that in the way you invest for them? I mean, there's a million questions that you want to know, ask, right? I'm sure you've given a lot of thought to that element. Like, whose money are you managing? It's a huge responsibility. They might not be able to make it back.
100%. And I, for those clients where I provide that more holistic, comprehensive service, I think the intangible aspects of it are probably more important. There's the mechanized, the math behind what you're doing, compounding and, the asset allocation, all of that. But I mean, I always start with a question, what is your relationship to money? Grow up poor, rich, somewhere in between? Did you talk about money at the dinner table? Was it frowned upon? You a saver? You a spender? Just all those qualitative things to kind of get to the rub. Who are you as a money person? Forget investing. Just what is your relationship to money? And they're all, as you know, there's all these fancy risk tolerance questionnaires and scores and all of that stuff. That to me, it's not unimportant, but there's the theory. Okay, this client is X age, they've got this much time to retirement, and here's their quote unquote risk tolerance score, whatever it is. You should be invested in this way. Well, that's the theory, right? But if, to your point earlier, that hand holding, that bedside manner, that if I come up with this perfect plan for a client and they freak out because the market has a hiccup, there goes your plan. So, you really have to have that psychological, that qualitative aspect of helping a client, because, they come in a whole package. They're not a textbook, right? I think that's kind of the biggest thing that I've learned is there really is no one best way, but there are a lot of ways to go wrong. So, there's so much good that you can do, clients, as you know. I mean, it's just obviously the industry in many different ways has gone much too far in terms of taking advantage of those people and charging them fees that are too high and all of that. But, I feel good about what I do in helping people.
Helping people. No, I love the sound of that. And I like the point you made that every client is an individual. Even if you manage a family's money and there are many individuals, you have to take into account all of the individuals. And they will be all different. Even if they grew up in the same household, they might have different reactions to the upbringing they had. And it takes a lot of empathy and listening to acknowledge, where are we coming from? Where are we going? How do we feel about things? Because this, on an average day, if there's such a thing in the market, it doesn't matter. But there's so many days when it really matters. To know how the clients will respond on a tough day, because it's a day when I really, go in, I'm probably buying things, and I want to know that the clients are at ease, at peace, and they'll stick around through it. I think that's the biggest lesson, not being scared out of the market. I think Peter Lynch had this saying that a lot of money was lost by being scared out of the investment, and people miss out on opportunities because of it. I do want to ask you about your personal journey to developing that kind of resilience, that you yourself are okay through those hard times when the markets are, scaring most of us out there. Where did it come from? Was it always there?
Well, I'll start by saying I've done a lot of dumb things. I've made a lot of mistakes. I've mentioned this before, maybe not on your podcast, but I have a Word document I call the folly gallery of all my mistakes that I categorize, okay, this was the mistake, this was sort of the class that had happened, Fortunately, those are fewer and far between as time goes on, but I think I'm kind of with Charlie that I do think there's a certain genetic element to temperament. To a certain degree, it can be learned and trained, but I think that sort of basic range that you're born with, for whatever reason, genetically, obviously we don't have a genetic gene for investing, but there's something
We don't know yet.
There's something about risk reward, deferred gratification. Maybe it's something to do with, whatever it was, 20,000 years ago, or 10,000 years ago when we started farming, that delayed gratification, right? Because, all right, if I'm the guy who's just got the spear and I'm going after the woolly mammoth, well, I've got my meal tonight. I can go, cook it. I can go forage for berries and get them now. If I have the gene for planting a crop or saving that crop, right? I'm hungry and it's, February, March, and I can't plant yet, and I've got my seed potatoes in the cellar or whatever. I can't eat those today because I need to plant them for tomorrow, and then I can harvest them in 6 months. There's got to be something in the brain that causes that to express itself in investing. And for whatever reason, I have that. I have, I tell people I'm an average investor with an above average curiosity, and then the temperament that goes along with it too. So for whatever reason, I'm fine with it. I think it comes down also to confidence in the work that you do, right? If you're the one reading through those proxies, you're the one reading the 10Ks, it's a lot different than reading someone's analysis, as good as it is. Even Warren Buffett, right? If you coattail Warren Buffett or Charlie Munger, you're never going to have the same level of conviction that if you did it yourself.
I love that point, and I share it with clients that, I know the businesses that we own, and I know the clients. And this industry has created this layer of middle men. And you might have funds and products and funds of funds in your account, But if you actually wanted to know why is Berkshire in my portfolio, you might have to ask 7 people before you get to the analyst that actually researched Berkshire, went to Omaha, asked the question, came home, and put it in the portfolio, because it's layers and layers into the products. And then in many cases, people don't know who the end client is either, which is something that's very important to me. I actually want to know the names, the people, the stories. So I think there's a huge value. And I wouldn't be able to do the work that I aspire to do without being able to pull up that proxy and read it. How did they say it? How did they write it? How is this shareholder proposal worded? And actually dive into it. And maybe it's a bit of obsession that's past the 9 to 5 mindset. But I do want to know why this million is important to that client and less important to the other. Like, what does this amount of money mean to them? Gives me a context, right? So when a day happens, when the market sells off and people say, oh, this is the worst day for NASDAQ in 11 months, I can pick up the phone and talk to people from a context that I understand on both sides. I know what we own and why, and I know whose money I manage, and I don't know any other way of doing it, but it's very important to me, and I can tell that it matters to you because you do know what you own and why and whose money you manage, and I don't think neither of us could do it any other way. I do want to ask you about the experience of running an investment firm, and you and I spoke about it on a few occasions, and I do want to talk about it because I feel like it gets lost. People talk about investing, what's your process, what kind of stocks you own, and we kind of never really ask in what kind of an setup you operate in, and how does it work, and why did you choose this one? So I'm very curious about your transition from I'm investing to I'm running an investment firm and attracting clients and keeping clients happy and navigating a regulatory landscape as well. So tell me about the transition from I enjoy researching stocks to, hey, I'm running an investment firm now.
Yeah, gosh. Again, it's the curiosity in me that leads me to do everything myself, which has its benefits, has its positives, but also has negatives. The negatives clearly being you can put a lot on your own shoulders, and certainly being a one-man shop, I do everything. So just kind of stepping back, when I first started, I had this romantic notion of doing it the Buffett style, right? I wanted to have the Buffett partnership, 6% hurdle rate, 25% of profits over that. That was my ideal that I had in my mind. And it quickly became apparent to me that based on the regulatory landscape, that's a performance-based fee, which in the eyes of a regulator is actually more risky than great percentage of assets. So I said, okay, well, it's probably not going to work for, kind of what I'm doing, at least initially. So, gosh, we can go off into a whole bunch of different directions here. But, I first looked at, and I've had friends that actually formed funds. So, you form an entity and you get people to buy into that entity, and you have to have a custodian and a third-party administrator and an auditor, and those costs just add up enormously. So that led me to separate accounts. So, I only trade on behalf of the client. I only have this, limited power of attorney to make trades. I can't take their money off to Bermuda or wherever people go when they embezzle money these days. So that pushed me into the realm of separate accounts. So that's okay. That's easy. But then when I first started out, and stop me if I'm getting too granular here, said, well, maybe what I'll do, if I were in the client's shoes, what would I want? And so I then came up with a structure, the sort of typical declining fee of assets under management. But then I also added a column in there for tenure. So you can lower your fee by having more money with me or by investing with me for a longer period of time.
Mm-hmm.
fast forward to today, and I've vastly simplified my fee. You know, that was almost probably too romantic for me in the sense
Uh-huh.
of I don't think any client that joined me joined because of my fee structure. So I was making a lot more work for myself by doing it this way. So now I have a very simplified tiered structure, which I designed to be, if Warren Buffett was looking at it, if he was looking over my shoulder, I would be perfectly fine with him seeing what I charge clients and, confident that I'm delivering the value that I should be delivering. So that was kind of a tangent, but when I first started, and every state is different, as you know. So there's consultants everywhere, right? I mean, gosh, there's. But I decided to. I did. I'm probably unique in this respect, but I did everything myself. Fogamill.
Wow.
I wrote my own contracts. I did my own, the policies that I needed. Filed everything with the state. Registered my LLC. Anything and everything. I did that. Submitted it to the state. In New Hampshire, it just happens to be very regulatory friendly state. It's a small state, not a lot of red tape when it comes to forming businesses. So I literally just called up the head attorney at the securities division and said, hey, how do I do this? Or what are you guys looking for when you do this? And when I submitted all my initial contracts and everything, they came back and they said, well, geez, you got this hedging clause in here, let's revise that and rework this, and resubmitted it, and it was fine. And I've since gone through an audit with the state, and that has been less. I think probably because I worked in banking for so long, developed maybe a thick skin when it comes to regulators, because a couple of my friends, just pure happenstance, totally different states, they went through their own state regulatory exam, like within the same 2 or 3 month period. I mean, it was kind of strange that happened, but they're kind of freaking out a little bit, and I'm just like, well, I'm nervous a little bit, but not as, I'm like, it'll be okay. And it was fine. I didn't get any dings, and it was more of a constructive conversation with the regulator. And I told my friends that, I'm like, you're above board. You're trying to help people.
Right.
And again, my experience with regulators in banking, you can have the most pristine set of operations, books, you name it. They will always find something. Always something that they will find, even if it's, geez, you stapled this instead of paper clipped it. Like, there'll be something that they come back with for you to fix. So I actually just looked at the regulatory exam as, free consulting, although they did charge me for their visit, but there were a lot of things that came out of it. For example, I'm a one-man shop. Literally, it's me. I don't have an assistant, nobody else. I don't have an intern. There's nobody else here. So one of the things they came back with was, hey, you're a one-man shop. What happens if you get hit by the bus, the proverbial bus? And so I ended up instituting a, agreement with my friends that, hey, if something gets hit, if I get hit by the bus, clients will have your name and they can call you, and you'll help them out. So I solved that problem. So, and I don't know who's listening to this, or your audience, if someone's thinking about starting up an investment firm, but I think you just kind of have to, you just do it, you figure it out as you go along, and as long as you're not trying to take advantage of clients, you're going to be okay. So did I touch on?
No, I think it's a beautiful journey, and I love that you relied on your previous experience, because a lot of what we talk about is not that you did something wrong, but it's about record keeping. Like, that's really what regulators are looking at. Do you have records of this, records of that? And investing creates endless records. There are statements, there are trade confirmations, there are proxy votes. it's endless. So keeping records and having a good system of keeping records. And I've heard this term that I really liked of having a compliance culture, like culture of compliance within your entity, your business, whether it's a one person or 50 people or 100. And I really like that because I feel like if you have the systems, the processes, the procedures in place, then you start, saving things. And I've improved mine because I feel like I only have that much time in the day. We're joking about the 9 to 5, but even if I work longer than that, I want to spend that time in the highest value added way. And I do think that there are two parts of it. One, I want to look for investment ideas. And two, I want to spend time with clients. I think they need it and I need it. They want my attention. Not all the time, but there are times when I have to really, clear the schedule and be available. Everything else, it's a must-have, one-have, but it's not visible. I mean, it's on a different dimension, right? Like, so it's almost like I know I have to have it, and I know I have to have those things, but they are not. My clients might not even know how many layers of records I have to keep to be compliant, right? And how many things have to be up to date, how many things have to be signed by them or signed by me, and on and on. These are not. I don't know how to label these. They're kind of necessary. You're on a ship, they're necessary to keep on moving, but you need everything else to actually, propel the ship forward. So you have the vessel, like for me, it's the vessel, like the entity is a vessel, everything is a vessel, but the engine is the investments and the clients are the engine that will propel this thing forward, right? So when I have no clients and no investments, there are no records to keep, right? Like I'm free to do nothing, like, so it's, the more clients you have, the more you're doing, the more you're active, and you start to create records. You have to find a way to keep those records. And I don't have the answer, but I kind of feel like, I'm thinking of my grandma, who was an accountant for most of her career. And I remember she worked with, paper a lot, and it was a lot of paper. And even in my career, I remember paper, and we stored paper in one of the firms where I worked. There was a lot of storage and a protocol, how to store this and put it in boxes and went to storage in New Jersey and so on. But I'm thinking in the digital world, you can ask for records for almost anything, receipts and dated things, and everything is in an email and so on. I feel like we got to the point that you kind of have to say how many records are enough. And I don't know the answer. I'm very curious where the discussion will go in terms of regulations, but I think we have to stop and say, like, it's enough. And I'm a bit scared how the digital world gives you the permission of, give me the receipt of every minute of your day and like, what did you do? And it can go too far.
Yeah. And I think, and again, for someone listening out there that, might be wanting to start a firm or, just my experience, I think, so I did an exercise just quickly for, there's Joel from MIT Investing. He had a tweet. This was probably a year and a half ago now. What is your cost structure for your firm? What does it cost you? And those that have funds, and need all the accountants and audits and all of that, they could run into the six figures. I run my entire firm. I work out of my home office, but the sort of core things that I need, it's under $10,000 a year. And you can go, and I'm sure you get these emails all the time. Well, this new consulting thing, and we've got this new piece of software, and you can do this and that, and I may be either old school or ignorant or simple. I don't know what it is, but I've just come down to use tools that are sort of out there. I use Excel, OneNote to store a lot of records. It's all secured. It's on the cloud in Office 365. But that works. Like, I don't need a fancy CRM system that's going to log. I had one at one time. I was trying it out where, if I made a phone call, it would log, okay, geez, from, 12:30 to 2 o'clock, you talked to Bogomil, and, this is the quality of your call, and it would automatically take notes or something. Like, it gets to be too much. And I think there's definitely something there for simplifying. I think, you're absolutely correct. And hey, how do I scale this thing? How do I make sure that I'm not wasting time? But I think a lot can be done with free or nearly free tools that are out there.
Mm-hmm.
I think as long
Mm-hmm.
as you capture the essence, again, I mean, this actually kind of surprised me how, I'll just leave it at how low tech the auditors were. It was like, okay, print out some stuff and here's a flash drive. And like, they just wanted the stuff. It didn't need to be my, notes from a client meeting that had to be in Salesforce or something. Just print out the emails or, save the emails and here are the client notes, trade tickets, whatever it might be. And as long as what are you doing? What is that
Yeah.
essence of what you're trying to do versus, all of this industry of software that's now out there? What are you trying to accomplish?
No, I love that. And I think simple is better if you can do it in a simple way. And it's true that we can keep records of so many things, even how you spend your day to the minute, you can log it for whatever purpose out of your own curiosity. And yeah, it's fascinating because at the end of the day, are you doing something useful? Are you doing it the right way? And you do have to show records of what is it that you're doing. And I think that's the ongoing balance of how do you keep the records that the record keeping doesn't become your job. And I think there are tools
Yes.
to do that.
And I should, give a, put the asterisk there that I'm a one-man shop. I think a lot of what I do, I can get away with because I'm a one-man shop, right? I'm the chief compliance officer. Do I need to review my own trades every quarter? No. Like, right? I already know it. So there's already that layer of sort of work that's eliminated because I'm a one-man shop. So it may not work for a firm that has, more sort of traditional staff, or, I'm not trying to build a $1 billion fund with all these people. I just like what I'm doing and I like working out of my home office, and, so it works for me, but it might not work if you're trying to scale it. So I have to kind of give that
No,
little, that little.
that's true. Once you have other people, you have to supervise. And it's a whole other chapter when it comes to regulations. How do you supervise? Who has access? Who doesn't have access? What kind of access? And you and I know that it's a whole other. Eventually, you do need help. I think with some of those things, you do need help. So you can actually get back to investing and get back to talking to clients. I want to ask you about something you brought up when we spoke off the record that I found intriguing, how you barely trade. And you told me an anecdote that one of the brokers even reached out to you. Like, are you okay? and I don't trade a lot, but tell me more about it. What does it mean? In a sense, I see you as the ultimate owner of businesses that doesn't need to trade because you bought to own it, and the brokers don't really get it. Tell me more about that.
So, and I trade more now, just for those clients, hey, I just had a client that needed $5,000. I had to make a trade and get them their money and send it off to them. Initiate a withdrawal. I think that's not what we're talking about here. We're talking about trading,
actual activity, yeah.
In individual stocks. So I use Interactive Brokers, and it's built. It's a good platform. I mean, they're great, but it's built for traders. And apparently, every time you log in, it downloads the latest version and like timestamps it or something, or date stamps it. So I had a problem, and I called the customer support, and he said, "Well," got into the computer or whatever, and he's like, "Look at this file." He's, "Well, that can't be right. This says it's been 3 months or something since you've logged in." I said, "Yeah, that sounds about right." Just could not comprehend that someone would go in that infrequently, especially a professional investor, some with clients and so forth. But I don't think it's necessary trade. I think it comes back to what you said. You're a business owner, and so as a business owner, you can let the bat sit on your shoulder, like Buffett says, and balls fly past you. But I think it also depends on the amount that you trade. Kind of depends on your own personality, your own strategy. My focused strategy has 8 positions, right? I'm okay with a higher degree of concentration.
Hmm.
It might there's not much activity, or stocks are too high, or I have an opportunity cost that doesn't come along. I'm better off just holding what I have, whatever it might be. But if my baseline is 8 positions and yours is 16, and someone with 20, I think just whatever that level of trading activity is going to be magnified just by the number of positions you have in the portfolio. So
Of course.
I guess I'm always surprised, and it might just be a function of the way that the figures are calculated, but every year when I calculate my turnover, I'm always like, wow, that's higher than I thought it would be, given the fact that I might not trade for months at a time or something. So I don't trade very much, and I think it's just a symptom of being an owner.
Yeah, no, I love that. And, when I look at portfolios, I realize that there's a certain core, and I hold more than the handful of stocks for my client sensibility. They like when it's more diversified. But I see that the core sometimes has not changed for years. I remember the share count for this particular holding that we've had for 10 years, 12 years sometimes, or more. And, there's some holdings that go back earlier. The accounts were moved over and so on. So I realized the core, the engine, however you want to describe it, that pushes the compounding forward, has not changed. So if you just look at that, it's not much trading going on. I might have added here and there when I saw a second chance to add more. Now around it, there might be more activity because these are newer positions that I'm still building out. So there might be activity. I never knew what's the right statistic to look at turnover, because it's like any number, it's very misleading if you just have one number and you say, oh, your turnover is 20%. Well, I'd like to know a bit more. How does that 20% translate to actual activity? Do you just across the board refresh 20%? Is your core the same? What is it? Because even Buffett is actually moving in and out of positions.
Yes. Yep.
Yeah, right? So I have a lot more questions when people say, I have a 20% turnover. Tell me more what it means to you.
Yeah, I completely agree with that.
Yeah, and then, we see Buffett as, he has holdings that he truly has not sold for decades and decades and decades. And I really like this image when he says that he receives more in dividends from some of those holdings that it cost him to buy them. I think it's a very powerful image to have, right? I like to think, he spent $1 million and he's getting $2 million in dividends.
Right.
Whatever it is. I don't know. I'm making up numbers, but it's basically the proportions. It's very telling how, compounding can really enrich you. You just have to wait a bit longer than you think.
Yeah, and I think it kind of like taxes, you can go astray if you're trying to manage to a certain turnover. If it makes sense to sell something, you sell it, or whatever it might be. To sort of target a turnover, I think would be wrong. If it's consistently 100% or something, you might want to question what you're doing, but it will ebb and flow just like anything else.
Yeah, very much so. I mean, the turnover goes up very quickly. Let's say you have a 2% position and you sell it and you buy a new 2% position. Your turnover starts adding up, very, very quickly. So it's not, you have to understand the context. Adam, I do want to ask you about a dream client. I think we all always think, imagine who would be a dream client for you?
Gosh, like the clients, I think, again, to go back to sort of the qualitative, the dream client is someone, a smart, intelligent friend. I mean, I could pick, I could pick you. I could pick, my good friends, Andrew and Carter, that, go to Omaha every year with. And for whatever reason, let's just use you, if you Bogomil, you didn't want to do it yourself, right? But you had all of the knowledge, the curiosity, the interest, the ability that dream client one has the ability to invest with you, but they also have the aptitude. And they might not want to do it full time, but stocks go down, you pick up the phone, you say, hey, geez, this company's got this balance sheet, this looks fantastic, we're going to buy more. Like, they get it. They're a business owner, whether they actually explicitly are because they built and sold a business, or they were an investor, but they just don't have the time to do it.
Mm-hmm.
And then sort of related to that, I think it's, we're viewed as the expert, but I learn a lot from my clients too. Mm-hmm. Whether it be their explicit business experience or just their background, whatever it might be, I always learn something from clients. So I think that dream client would have something to offer me as well, even though I'm the one working for them. But I think it's definitely partnership, a relationship, and a friendship ultimately. No one wants that jerk client, right? That dream client that pays you lots of fees, doesn't care about your performance and doesn't call you. Well, if they're a jerk every time, you just don't want to. Maybe you have to take a client or two because you're building up a business, but you don't want to partner with people like that, right? You want people who are going to be your friends. That's kind of how I'd put it.
I think it's a great privilege and luxury to be able to choose your clients as much as they choose you, and to actually give both sides time. And I know friends who have two-sided interviews. They're trying to figure out if it's a good fit, because it's almost like a roommate moving in with you. You'll get to see them a lot. You'll interact with them a lot. And throughout the years, I've been in the business 20 years, I've worked with people who had intimate knowledge of actual stock research. One late client was an old Wall Street individual who started in the 60s and told me so many stories of old Wall Street and what it was like when he started. And at that point of his life, when we worked together, when he was my client, he was no longer interested in doing it day to day. So he would look over my shoulder and ask questions, thoughtful questions, but he would never question what I'm doing, which I think is very important. All the way to clients who have no interest or who are very intelligent, very curious about a lot of things, but they don't want to commit time and attention to investing and researching, but on an intuitive level. And I have great appreciation for it. And I come across that, and I'll bring up a story in a second, but the intuitive understanding that Adam is doing a good job. I don't know exactly how. I don't know the technicalities of it, but I know that Adam is doing a good job. And I bring it up because every year I go to Omaha, on some occasion, I don't know, I run into somebody that has been a shareholder of Berkshire for many decades. And they tell me a similar story that rhymes, that on some level they just knew that Buffett is the right guy. Honest, they trust him, he has a gift for it, he has a passion for it, and they knew that they are directionally right. And they didn't have the technical analysis and understanding and the scientific process to examine what Buffett is doing. They didn't, but they knew that this is the right person doing the right thing. So I also experience clients like that. So it's a wide range of, if I can bring up a particular stock to a client, or a client just trusts and knows that I'm doing the right thing. It's a beautiful range that I experience, and I learn from both sides in different ways, different things, but it's fun to see how, if you can have that kind of trust, I think you're in a beautiful place to really prosper in this pursuit.
Absolutely. Yeah. And the people that do it for the money don't last long, or those are the ones trying to sell returns. And it's, I think we're definitely in the minority in terms of how we operate, the value
we don't mind.
World, but
we don't mind.
We don't mind.
No, it's a relationship business. And then the more you spend time in this industry, the more you realize it's a people's business. It's people's money, and money is a very personal, very intimate topic. And it has a huge impact on how people, their well-being, how they live. You have a huge responsibility here, and it's in so many situations, in so many conversations, it's not about the stocks that you picked that went up, but it's about the role that you play in their life and how you can navigate and guide them through what's going on. Speaking of that, I'm very curious, and it's my closing question for today. In the next few decades, Adam, like if we could dream up a little bit today, how do you see the next few decades? What would be the right, ideal path for your business, yourself, the next, let's say, 4 or 5 decades? Let's go to Munger's and stratosphere up there.
Yeah. And again, I don't know what I don't know, and sure, it's amazing how quickly time passes and how much change happens in even a 10-year period. But kind of dreaming, I don't see myself being big. I mean, like I said, I don't have any aspirations for being a billion-dollar firm, or even hitting that $100 million mark. I have a couple of friends who have firms that are now SEC registered, and I talked earlier about that relationship, the interaction with the state regulators. The SEC is apparently very cold. It's like, nope, here's your answer, or here's where to look it up, and that's it. Where the state is more sort of a friendly, helping hand. So I think there's a lot of advantages. There's a lot of appeal to me to staying relatively small. And, part of that is I don't want to have staff to manage. I don't want to have, regulatory burdens. I don't want to have even my universe shrink. I mean, I have my smallest portfolio company is, under 30 million market cap. And you can't do that when you're a huge company. I mean, that just eliminates, that fun you get to have with these smaller universe. So I like staying small. I guess my ideal sort of dreaming situation is one where I'm like Warren Buffett in one important, respect, in that I have an assistant who can handle all of the maybe it's a chief compliance person / assistant that I can just sit there and do the fun stuff and let them deal with renewing their FINRA membership or filing the ADV or whatever it might be. That's what that's how I kind of dream about the future, is, more freedom to do the things that I love doing, less of the things that I don't like doing, but having that complete independence where, I love dealing with clients. I have clients, but, manage mostly my own money, and, my client base has sort of distilled itself to, kind of my best friends, and that would be fantastic.
Do you know how compounding works? If you're doing the right thing over a long period of time, you know what happens.
Yes. We'll cross that bridge when it happens. It'd be easy for me to sit here and say, oh, geez, I can't wait till I can, tell how many people I can't manage their money for them or something. I mean, who knows? I mean, I have some friends and, some others in the industry, that have mutual funds or closed-end funds, or, maybe it's a hedge fund, or maybe it's even, I see myself, I do some business valuation work with a friend on the side, and, I think it would be kind of fun to take the stock market out of it, right? Like private businesses. Let's just focus on operations and be able to be, that board member. I think that would be fun.
Mm-hmm.
I think it'd be fun to serve on the board of a public company. That's something I think would be interesting to do. So there's a lot more qualitative things that I think I'd be dreaming of than, just pure size. But as you pointed out, if you're half decent at this game, compounding will catch up to you.
Well, I think Munger had no intention of ever ending up on any list, but he did the right thing, or not as many silly things as he pointed out, that compounding took care of the rest. And I think one of the last interviews, when he passed away, I spent that week looking up his last interviews, and he actually gave a disproportionate number of interviews in the last few months or last year. And he said he didn't want to be more of a hero to the young than he is already. And I think there was this moment in the revelation when he was channeling Ben Graham, and Ben Graham was the teacher to so many people, that Munger felt like he became that teacher to all of us. And now the eminent debt, as he phrased it, that his teachings continue and will teach the next generations, that as bringing it back to Omaha, that will invite the whole new generation of 20-year-olds that discover Buffett and Munger in a bookstore or somewhere, and they end up coming to Omaha and learning more about it and pursuing it and investing in a whole array of businesses that you and I can't even imagine today, that will be doing things that will hopefully make our lives better in so many ways we can't even imagine today. But it's a fascinating pursuit. But if you do stay in the game long enough, compounding will bring you up to the surface, and you will get noticed in ways that I think can create new opportunities, of course, but maybe will bring more attention that you're willing to accept. Who knows? But I definitely wish you a very long runway of compounding, and I'm very grateful for this conversation. I really enjoyed it, and I'm glad we took it in different directions than the last one, because I felt that the world needs a conversation about running an investment firm as much as we need to understand how picking stock works and research. And I think both people that are interested in joining this profession, but also clients, I think it's helpful for them to understand what kind of environment we operate in, how this whole thing works and why it works. And I mean, as imperfect as it is, I'm very grateful that there is a way to set up an investment firm in the United States. And I have friends in other parts of the world where it's not always as business friendly or investment firm friendly environment, where it's a lot trickier to do it, especially if you want to be a solo operator like you and I are. So I'm very grateful, and I hope that we get to do it, and there is a framework for us to do it and serve the clients that we like and do the things we enjoy. Adam, thank you so much for today. You have some last words.
Just going to offer, to the extent that, we can invite more competition to this ourselves, but, just I say that in jest, but, if, your listeners have questions, whether we do a follow-up, talk where we go through them or answer them in some sort of chat or blog post or whatever it is, feel free. I think, again, every situation is different, but I think if we can be of help to someone who's seriously thinking about doing what we do, happy to help.
Very much so. No, I appreciate you saying that. And I noticed that even clients or prospects appreciate understanding the difference between a fund or a separately managed account and what can be accomplished in each and how the two coexist and work and different regulatory environments they operate in. I think the more education and understanding there is, I think all of us can be smarter about making decisions, choosing an advisor, or doing it on your own, or doing it with somebody's help. Whatever works best for you, I think the more we know, the better, the more empowered we are. Adam, thank you so much for today. This was a wonderful discussion. I'm very grateful you agreed to it.
Yeah, I'm grateful to be here. This is a lot of fun.
You were listening to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest subject of all, money. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. If you enjoyed the show, please take a moment and follow, subscribe, rate, and share with friends and family. We rely on word of mouth to promote the show. One click for you means the world to us. Thank you. Until next time, your host, Bogumil Baranowski.